What's up, investors? Ken from the Dyslexic Investor here, and we're going to be looking at couple fast food, fast casual stocks here today, and looking overall at the consumer discretionary S&P 500 fund ETF right here, or also known as the XLI. So the major components in this is going to be your Home Depots, your Amazon, Mickey D's, the Golden Arches, McDonald's, Nike, Starbucks, TJ Maxx, Target, and so forth like that. Three we're going to be looking at are going to be in the fast casual section. So first and foremost, we're going to be looking at Yum. Yum Brands is your KFC, your Taco Bell, those guys over there. You can kind of see here towards the end of October, it's been pretty much, it's actually been at a downtrend. It hit its high in like mid-September, early September, and this kind of slowly making a way down. I believe this was an earnings right here. Yeah, an earnings. I think they guided down. Again, this is all to do with the upcoming recession, and people were thinking, oh, this is going to be fantastic to hold this because everyone needs their chicken, their fast food, any of those criteria. So just do a quick little overview on this. So this is going to be this bottom right here, which clearly broke through. That's a horrible color. What in the world? What made me do that color? Let's do like yellow. So let's remove that. So we're gonna try to do a straight line. There we go. It's kind of broken through it. It's kind of having a little longer candle here, so it could be potentially coming up. But again, it's broken through the 200 EMA, so it's clearly in a downtrend. Looking for potentially more selling in this one particular. There is no basing yet, in the sense that the RSI is way oversold, but that doesn't mean it's a buying opportunity because this hasn't hit the RSI lower point in a while. So let's look on a weekly chart. This is a little more compelling. You can kind of see here it's holding at the 89 here. This would be a great little opportunity to see if it would potentially kind of start building, let's call it a smaller, like a base in this area, kind of just trade sideways here and potentially come back up. But again, the parameters that we use here, it's kind of one. It has I wouldn't be able to put money behind this yet because these lines are pointing straight down. The yellow and the pink, purplish colored one, fuchsia purple. And so that meaning potentially more damage to come. We're going to then look at CMG, which is Chipotle. So this one, again, a little bit better towards the end of October, which is just a couple weeks ago. I believe this had earnings too. Like these all had like pretty good earnings, but the outlook was just a little bit guided lower. So this potentially would the purple line cross below the yellow, and it just started a downtrend. You can kind of see here before that the 55 has kind of held, or even the 89 on the daily chart, but it's not as bad as Yum because it hasn't broken past the 200 day yet, which is right here, the teal dotted line. That's a good sign. But again, like these arrows are pointing, or these lines are just pointing straight down. So if you just did like a channel, it's just been pinging around here. So potentially this needs to kind of feather out, level out. Again, a good point just by doing eye work here is like right here, here, and here would be a great point. Ideally, right here would be fantastic to kind of level off and potentially stop some of that downside trend. So let's erase that, and we're going to go to the weekly now. The weekly, it did blow to 21, which is never a good sign. The RSI is in the midfield-ish. It's on the weekly, not oversold, but you can see in the past when it had the, I don't know if everyone remembers the E. coli breakout, I think twice, right? I'm going to have to double check that. Where they had contaminated food or one of the vegetables or lettuce, and things kind of just went to shit town here. And after that, kind of leveled off. You can see here, like, when these stocks, the huge swings like this, it requires to build a base like this. It's not going to be able. This base right here is super important. Super important. Once it has a big move up, builds a base, and this has kind of been just climbing ever since. So it's the same way, excuse me, on the way down. It has to build bases and go from that point forth. So yeah, this is definitely, it's a little bit more, this is just straight down. This is a straight slide, or basically almost a ladder to the floor. Just have to wait for this to level out. Now, last but not least, we're going to go to the golden arches. So this kind of looks kind of like Yum as well. So this is due to, again, the fears of the recession maybe not hitting as hard or not going to affect us that much, and the China deal's coming through now, and people are going to have some more money to spend. People are going to have the $1,000 a month potentially with the dependent presidential candidate and so forth like that. But Mickey D's, everyone knows that they're a cash machine. Probably not the most healthiest food, yeah, for sure. But then you can see here, it tried to build a base here, but something must have happened there. So I wonder if that was an earnings. Yeah, so they must have guided, let me get this out of the way, must have guided lower with their guidance. And again, breaking that 200 is never a fun thing to do. You can kind of see here, it is holding the 89 on the weekly chart, which is fantastic. And what I like to see on a weekly chart is the oversold. But that oversold reading can go on for quite some time. They have a super healthy dividend within Mickey D's, because a lot of the operators are actually franchisees. But that being said, this needs to level off for maybe a week or two on the weekly chart, maybe even longer, and maybe at least 10 candles on the daily chart to kind of level off, because you can kind of see here. So there's 1, 2, 3, 4, 5, 6, 7, 8, like this is like 12, almost 2 weeks right here. All right, 2 weeks right here, and it kind of dropped off. But again, it was earnings, so any stock is going to have its biggest moves, unless something else crazy happens, is normally going to be around earnings. Looking at potentially some buying opportunity, it's going to be pretty scarce, because let's just draw some make-believe lines here. We're going to draw here, kind of broke through that. I kind of like, this is another support here. This is some stronger support, but this is when it was above the 200. It's broken below the 200. So in theory, is this considered super oversold and a great buying opportunity? Perhaps. It's hard for me to put money into this. I like to see it level off a little bit, because again, all these moving averages are pointing straight to the ground, and I don't like to see that when I try to go long on a stock. Trying to look at, see, it did hit the oversold multiple times on the RSI down here, which is, again, this can be oversold for months before it even bounces and things like that. You did see here in the past, but again, that was with the major sell-off here. Did a nice V-shaped bottom, but that was the overall market trend. This is completely of changing of money. So they're basically taking money out of the XL, some parts of the XLY that had a safer dividend, that had some potential of growth in very broad markets of everyone eats fast food, everyone enjoys a hamburger, everyone enjoys a delicious burrito. So now it's kind of going back into some fast tech stuff. So you can see this in the XLK has been popping off around the same time. So it's that 1020, 1023, 1022 time frame. So basically 2 weeks ago, with the Fed stuff and the China deals kind of been popping off and going higher. So hitting all-time highs in the markets. People want to put more money into the faster growth stocks instead of a safer bet, doing air quotes, than a Mickey D's, Chipotle, or a Yum brand. Alright guys, thank you so much for watching. Don't forget to like and subscribe. This is Ken from the Dyslexic Investor signing off. Catch you guys on the flip side. Peace!